Passive losses in the stock market. Let's cash in.
Finance for the everyday millennial. Hard charging solutions. We provide an accelerant in the journey towards financial independence.
Welcome back to Cash on Cash in the Financial Forum for Young Professionals. The stock market has taken a beating this year. And if you're like most investors, that means you've probably got some stocks that have lost value since you bought them. Today, I'll explain how you may be able to use those losses to deduct up to $3,000 from your taxable income. Before we get started, if you want to get a handle on your personal finances, open an account with RINO Invest today. By opening a Club RINO Plus account, you'll have access to a wealth of resources for financial success. From a network tracker to checklists, handouts, our reading list, courses, an educational portal, and a forum to speak with other RINOs. Go down to the description of this video and click on the Open an Account link. Also, please subscribe to the channel if you haven't done so already. It really helps us continue to deliver awesome content like this. When you make a profit off the sale of a stock, you've made what is called a capital gain. On the flip side, losing money on the sale of a stock is referred to as a capital loss. Capital gains and losses only impact your taxes when you realize them. That is, when you sell the stock. Capital gains and losses are divided into two categories that are taxed at different rates: short-term and long-term. Short-term losses and gains come from stocks that have been held for less than a year, while long-term losses and gains come from stocks you've held for a year or more. To calculate the gain or loss from an investment, you'll take the realized amount, or how much you sold it for, and subtract from that number of shares times the per share adjusted cost basis. Let's look at a simple example. Say you bought 2 shares of Tesla stock for $1,200 each, but when you sold them, they each sold for just $900 each. The realized amount is $1,800, but the cost basis, or what you paid, is 2 times $1,200, or $2,400. You have a capital loss of $600. While the cost of the shares in that example was simple, the cost basis can often be adjusted for reasons like a stock split. If you want to know what a stock split is, click the link you see on your screen now. As you calculate your income for tax purposes, the next thing you'll do is subtract your long-term capital losses from your long-term capital gains, as well as subtracting your short-term capital losses from your short-term capital gains. This means that taxable losses during the year go towards offsetting any taxable gains first. If you still have taxable losses, but no longer have any taxable gains to offset against, you can also use taxable losses to offset your ordinary income by up to $3,000 per year. What happens if you have more than $3,000 in capital losses left over? You'll be able to carry those losses forward into future tax years. You can apply those losses up to the maximum deductible amount each year until you have applied the total loss. Be sure to keep good records of all your sales. That way, as you continue deducting your capital losses, you can prove to the IRS that you did have such large losses. If you decide a stock investment no longer makes sense and are considering whether and when to sell your shares, you'll also want to be doing so in the most tax-efficient way possible. This strategy of using capital losses to efficiently and deliberately lower your tax bill is called tax loss harvesting. If you want to learn more about the ins and outs of the stock market and the difference between investing and speculating, open an account with RINO Invest today and check out our Secure Your Securities course. You'll gain a clear understanding of the securities market and learn the information you need to get on the path to financial independence. Subscribe to this channel to see more of our content and click the bell icon to receive a notification when a new video is published. Thanks for watching, and until next time, this is Cassian reminding you that it is always a good time to cash in with Cassian.